All right, everyone, get ready because we're diving deep today, really deep into SBI Card's performance this past quarter. That's Q3 of fiscal year 2025 for those keeping score at home. We've got all the goods too, the press releases, those juicy investor presentations. Oh, and we even snagged some snippets from the earnings call, where things get real. Our goal, we're here to dig out those insights, the stuff you don't see in those flashy headlines.
It's interesting, because SBI Card's story, it's almost a mirror to what's happening in the Indian economy.
Mm-hmm.
I mean, think about it. They're the biggest standalone credit card player in the whole country. So when they win, the average consumer wins. But when they face challenges, well, it kind of tells you where things are headed.
Exactly. So let's start with the big news, shall we? Straight from the press release. SBI Card, they just hit a huge milestone, over 2 crore cards in circulation. I mean, that's a whole lot of plastic, or maybe metal, right? But hold on, it's not all confetti and champagne pops. Revenue, yeah, it's up a bit compared to last year, but profits, they took a dip, a noticeable one. Makes you wonder what's really going on behind the scenes.
That's the million-dollar question, isn't it? The thing is, the Indian credit card scene, it's booming, like seriously looming. It's all fueled by this massive shift to online spending, the digital economy taking over. And SBI Card, well, they're sitting pretty perfectly positioned to ride that wave. But there's a catch, a twist in the plot. The whole industry, everyone's dealing with this surge in delinquencies, people just not paying their bills. And it makes you think, right, could this be connected to all that rise in consumer debt, especially those personal loans everyone's taking out? So the big question, the one we need to crack, is how's SBI Card handling this whole situation?
All right, so let's get down to brass tacks. Let's look at those numbers, the juicy details from the investor presentation. Get this, SBI Card, they added 11 lakh new accounts just this past quarter. That's a 7% jump compared to the same time last year. And get this, retail spending, it's through the roof, up by 10%. And online shopping, it's the king. Almost 59% of all retail spending is happening online. And wait, there's more. Even UPI payments on those RuPay cards, they're skyrocketing. Like, seriously, up over 47% from last quarter. Think about it. Paying for your chai, your daily commute, all with your SBI card through UPI, that's kind of mind-blowing.
Yeah, it's a balancing act, isn't it?
Yeah.
It seems like SBI Card's going all in on growth, bringing in all these new customers. But at the same time, they're tiptoeing around this credit risk, trying not to slip. And this whole online spending surge, it makes perfect sense. It's right in line with how everyone's lives are becoming digital. And those RuPay cards, that's innovation. That's them thinking outside the box, expanding how people can access credit. It's almost like they're trying to make credit cards a part of our daily routine.
It's like they're saying, hey, forget cash. Use your SBI card for everything, but let's not get ahead of ourselves. Let's talk money, the nitty-gritty financials. We got some interesting bits from that earnings call transcript, the stuff that makes you go, So total revenue, yeah, it went up, but fees and commissions, that actually dropped, like 13% lower than last year. On the flip side, operating costs went down, good news, but the interest they're paying on all that borrowed money, their finance costs, that jumped up by 19%. It's like, whoa, what's going on here?
It's a bit of a puzzle, but it does make sense when you break it down. That dip in fee income. Well, maybe they're cutting fees to attract new customers in this crazy competitive market. Or maybe they're pushing those promotional offers, sign up now, get a free toaster kind of thing. And those rising finance costs. That's the world we live in right now. Interest rates are climbing everywhere. And that makes borrowing expensive for everyone, SBI Card included. But that drop in operating costs, that's a sign of them tightening their belts, finding ways to be more efficient. It's a mixed bag for sure, but there's a lesson here for everyone watching SBI Card. It's not just about making more money. It's about spending it wisely, being smart about those costs to stay profitable in the long run.
You got it. It's all about balance. But let's talk about the elephant in the room, the big one. Delinquencies. Those credit card defaults that are giving everyone a headache. You've probably heard about it. It's all over the news. Defaults are up across the industry. And guess what? SBI Card's not immune. Those analysts, they were grilling the management team during the earnings call all about those write-offs. The money SBI Card has to just kiss goodbye because people aren't paying up. And the big question they're asking is SBI Card's approach to risk, is it sustainable? This is where things get interesting. Buckle up.
Yeah, it's a reality check, isn't it? Credit risk is just a fact of life in the credit card business. It's a gamble, a calculated one, but a gamble nonetheless. But here's the thing, SBI Card, they're not just sitting there twiddling their thumbs. They're taking action, proactive steps to manage that risk. They're tightening up those underwriting standards, being super picky about who gets a card in the first place, looking at credit history, income, all that good stuff, trying to weed out those risky borrowers.
So They're basically being more careful about who they lend money to.
Exactly. And they're keeping an eagle eye on what they call customer leverage. That's how much debt someone has compared to their income. And when they spot an account that looks shaky, like it's headed for trouble, they're not waiting around. They're jumping in, taking action early. Now, those write-off numbers, yeah, they're a bit scary, but SBI Card keeps saying they're seeing some positive signs, like little hints that their efforts are working.
What kind of signs? Anything specific?
They're talking about things like improving their collection efforts, actually getting people to pay up. And they're tweaking how they evaluate those new applicants, trying to prevent those defaults from happening in the first place. But here's the key takeaway, the thing to remember when you're looking at any company in this game. You got to understand their risk management strategy is crucial. It's not enough to just look at the profits. You got to dig deeper, see how they're handling those inherent risks. Because a company's ability to manage risk, that's what separates the winners from the losers.
It's like a high-stakes poker game. You got to know when to hold them and when to fold them. So, what's next for SBI Card? What's their game plan, their secret weapon? Well, they just launched this fancy new hyper-personalization platform. It's all about using data and analytics to tailor those offers, those messages they send out to each customer. No more generic junk mail clogging up your inbox. Imagine getting offers that actually match your spending habits, your lifestyle.
That's what I'm talking about. Personalized offers, it's like they're reading your mind.
Hmm.
And it's not just marketing. They're using data to personalize that whole customer journey. From the moment you apply for a card to managing your account, they want to make it smooth, easy, intuitive.
Because these days, it's all about convenience. People expect that personalized touch. It makes them feel special, like they're more than just a number in a system.
You nailed it. And here's another big move. They're going all in on digital acquisition, making it super easy to apply for a card online, manage your account, all from your phone or computer. Because let's face it, that's how everyone wants to do things these days.
Convenience is king. That's the motto.
You got it. And they're not stopping there. They're also integrating their platform with all of SBI's other digital stuff, their mobile banking app, all that good stuff. It's like they're building this whole ecosystem, a one-stop shop for all your financial needs.
A financial super app? That's a cool idea.
Right? And they're even dipping their toes into those cutting-edge technologies like artificial intelligence, AI. They're using it to automate tasks, make things more efficient, and ultimately save money.
It's impressive to see them embracing these new technologies. It shows they're willing to adapt and evolve.
Absolutely.
Hmm.
But the big question still remains, will all these moves be enough to keep them at the top of the credit card game? Only time will tell, but it's going to be a fun ride, that's for sure.
It is, and that's what makes this whole deep dive so exciting. We're not just looking at numbers. We're analyzing trends, dissecting strategies, and trying to understand what the future holds for SBI Card and for the entire Indian credit card market, really.
And most importantly, we're thinking about how all this impacts you, the listener. Because at the end of the day, that's what really matters.
Exactly. So before we move on to the next part of our deep dive, we want to hear from you. What are your initial thoughts on SBI Card's performance? Anything that jumps out at you? Take a moment to ponder that, and we'll be right back to continue our exploration.
Yeah, it really is a balancing act, isn't it? Trying to grow, but also manage those risks.
Yeah, exactly. Like walking a tightrope, gotta stay focused.
That brings us to something else that's super important, their asset quality.
Yeah, they talked about that in the investor presentation, right? They even broke down those receivables by risk level, all those different stages.
Oh, yeah, they did. And remember, those receivables, that's basically the money SBI Card is owed by all those customers. So stage one, that's the good stuff, the least risky. Those are the people who pay their bills on time, no drama.
Those are the rock stars, the ones we all want to be like, right?
Right. And then you've got stage two, where things get a little bit, murkier. Those are the accounts that are starting to show some cracks, maybe a few late payments, a missed deadline here and there.
Like a little warning sign, a yellow flag.
Exactly. But then there's stage three, and that's where investors start to sweat.
Stage three, the danger zone.
Yeah, stage three, those are the accounts that are 90 days or more past due, the ones that are most likely to turn into write-offs.
Oof, that's not good. So how did SBI Card's asset quality actually look this past quarter? What's the verdict?
Well, their gross non-performing assets, or GNPA, basically the percentage of loans they think might go bad, that stood at 3.24%. It's actually a little bit lower than the previous quarter, so maybe things are stabilizing a bit.
That's a good sign, right?
It could be, but it's still higher than the same period last year, so it's something we need to keep watching, definitely.
Okay, so keeping an eye on that. And what about those write-offs? Everyone was talking about them on the earnings call.
Oh yeah, those are a hot topic. The analysts were peppering the management team with questions, wanting all the details.
They were like, spill the tea.
Right. They wanted to know why those numbers were going up and what SBI Card was doing to get things under control. So the management team, they admitted it was a challenge, but they were also like, hey, we're seeing some good signs, some early indicators that things are turning around.
Okay, so what are they doing? Give us the scoop.
Well, they talked about a few things, like ramping up those collection efforts, being more aggressive about getting people to pay up, and they're also being even stricter about who they approve for new accounts, raising that bar.
It makes sense, right? If they're more careful about who gets a card in the first place, that should lead to fewer defaults down the road.
Exactly. And they also mentioned that the overall quality of their customer base is improving. They're attracting more people with higher credit scores.
So better borrowers, less risk.
Right. And generally speaking, higher credit scores usually mean lower risk.
Gotcha. So it sounds like they're facing some real challenges, but they're not just ignoring them.
No, not at all. They're taking them seriously and putting strategies in place to try to mitigate those risks.
I was like, we got this.
And, it's important to remember that we're not just talking about numbers on a spreadsheet here. This is real people's lives, their financial well-being. So it's good to see that SBI Card is taking a proactive approach, trying to help their customers stay on track.
Absolutely. All right, so we've covered a lot of ground here. Growth, spending habits, the financials, those delinquencies. But there's one more piece of this puzzle that we need to look at. Their strategic initiatives. What are they doing to stay ahead of the curve? What's their secret sauce?
Ooh, that's where things get really interesting. They laid out some pretty ambitious plans in the investor presentation. And this is where you, the listener, come in. Because these initiatives, they could actually have a direct impact on your experience as an SBI Card customer.
Okay, I'm all ears. What are they up to? Spill the beans.
Well, one of the most exciting things is their investment in hyper-personalization. They're using all that data they collect to tailor offers and communication to each individual customer.
So no more generic junk mail clogging up your inbox. That's a win in my book.
Right. Imagine getting offers that actually match your spending patterns, the things you actually care about.
That would be amazing. I hate getting bombarded with offers for stuff I have zero interest in.
Exactly. It's about making it relevant, making it personal. And it goes beyond just marketing. They're using data to personalize that whole customer journey. From applying for a card to managing your account, they want to make it as seamless and intuitive as possible.
Because these days, people expect that level of personalization. It makes them feel valued, like they're more than just a number.
You got it. And another key initiative is their focus on expanding those digital acquisition channels. They're making it easier than ever to apply for and manage your SBI card entirely online, on your phone, your computer.
Because who wants to deal with paperwork and phone calls anymore? It's all about digital convenience.
Absolutely. They're also integrating their platform with all of SBI's other digital offerings, like their mobile banking app. So it's all connected. It's this whole ecosystem, a one-stop shop for all your financial needs.
A financial super app? That's a pretty cool concept.
All right. And there's more. They're also investing in those cutting-edge technologies like artificial intelligence, AI. They're using it to automate certain processes, boost their efficiency, and save money in the long run.
Wow, they're really embracing the future of finance.
They are. They're not afraid to adapt and innovate, which is crucial in such a fast-paced industry.
Okay, so they're making some big moves, but the question is, will it be enough to keep them on top?
That's the million-dollar question. Only time will tell, but it's definitely going to be an exciting ride watching it all unfold.
It is, and that's what makes this whole deep dive so fascinating. We're not just crunching numbers, we're analyzing trends, dissecting strategies.
Trying to figure out what the future holds for SBI Card and for the whole Indian credit card market.
And most importantly, we're thinking about how all this impacts you, the listener, your financial life.
Because at the end of the day, that's what really matters.
Exactly. So before we wrap things up in the final part of our deep dive, we want to hear your thoughts on these strategic initiatives. Do they give you confidence in SBI Card's future? What are your takeaways? Take a moment to think about that, and we'll be right back to continue the discussion. So we spent a lot of time digging into SBI Card's performance this past quarter, and I gotta say, it's been quite a ride.
Oh, absolutely. It's like we've been on this financial roller coaster with all its twists and turns.
Yeah, we've seen the highs, those impressive growth numbers, those ambitious plans for the future. But we've also seen those lows, those rising delinquencies, those challenges they're facing in this increasingly competitive market.
It's a mixed bag, isn't it? But that's what makes it so fascinating.
Exactly. It's like SBI Card is standing at a crossroads, facing both incredible opportunities and some serious challenges.
You nailed it, a crossroads. On one hand, they're the top dog, the market leader, in a sector that's absolutely exploding.
Yeah, they've got that brand recognition, that massive customer base. They really seem to understand the Indian consumer.
And they're not just sitting back and relaxing. They're actually making moves. Those strategic initiatives we talked about, the hyper-personalization, the digital push, those are signs of a company that's not afraid to evolve, to innovate, to stay ahead of the game.
It's like they're saying, hey, we know the world is changing. We know people are moving online. They want those personalized experiences, and we're going to give it to them.
And they're doing it in a big way.
Yeah.
But let's not forget about those challenges, those headwinds they're facing.
Right, those rising delinquencies, those increasing credit costs, and all that competition breathing down their neck.
Those are real concerns, and they can't just brush them under the rug.
And it's not just an SBI card thing, is it? It's a reflection of what's happening in the broader Indian economy.
You hit the nail on the head. This whole growth of unsecured lending, the potential for consumers to get in over their heads with debt, those are big picture issues.
It's a complex web, and that's why we do these deep dives, to try to untangle it all, to make sense of it.
Exactly. It's not just about looking at one company's performance in isolation. It's about understanding the bigger economic forces at play.
So as we wrap up this deep dive, what's the key takeaway for our listeners? What should they be thinking about?
I think the most important thing is to be informed, to be skeptical, to not just take things at face value.
Don't just skim those headlines, right?
Exactly. Dig deeper. Look beyond those flashy numbers, those revenue and profit figures. Examine those underlying trends, those risk factors. Really scrutinize those strategic initiatives.
Put on your detective hat. Channel your inner Sherlock Holmes.
Yes. And don't be afraid to ask those tough questions, the ones that make you go, I wonder.
Like, what's really driving those delinquencies? Is SBI Card's plan to tackle those risks really going to work? How are they going to stand out in this crowded market?
Exactly. Those are the questions that will help you understand the bigger picture, the long game.
Because SBI Card's performance, it's not just about them. It could have ripple effects throughout the entire Indian economy.
It's all connected. And remember, this deep dive, it's just the beginning. It's a starting point for your own exploration.
Take this information, these insights, and keep digging. Keep asking questions. See where it leads you.
In a world that's overflowing with information, the ability to think critically, to analyze, to form your own conclusions, that's more valuable than ever.
It's like we're giving you the tools, and you get to build something amazing with them.
And who knows, maybe you'll uncover something we missed, some hidden gem. That's the beauty of it.
The journey of discovery never ends.
Well said. So on that note, we've reached the end of our deep dive into SBI Card's Q3 FY25 performance.
But remember, this is just the beginning of your own exploration.
Keep those brains buzzing. Keep asking those tough questions. And until next time, happy diving, everyone.
Happy diving!